Hi, I'm Ollie Hooper, a quantitative developer at Quant Connect, and this is Idea Streams, a weekly video series where we test an idea derived from current market trends by building a trading strategy on Quant Connect. In this week's Idea Streams, we'll be looking at the hypothesis that an increase in the likelihood of a Biden presidency over a Trump presidency leads to an increase in price for healthcare stocks and a decrease in price for stocks with high earnings per share. So I gained inspiration from this article in the FT, which basically summarized the impact of Joe Biden being president and investors starting to gear up for this possible impact as the likelihood of Biden being president increases. So it covered his corporation tax plans and what this could mean if he reversed Donald Trump's tax cuts and the impact of that on the dividends from these shares. And then it also covered his plans for healthcare and how this could help healthcare stocks outperform as the likelihood of Biden being president increases. So it had this graph in here, which was the betting odds between Joe Biden and Donald Trump. So we're going to use this data from this graph to create a trading strategy which will buy healthcare stocks and sell high earnings per share stocks if the odds of Joe Biden becoming president increases, and do the opposite if the odds decrease. So let's go through a bit of rationale behind why we're going to use that strategy. So firstly, touching on the healthcare stocks. So Joe Biden has promised to expand the Affordable Care Act, which could mean that healthcare stocks would be a good investment for the future as the government will increase their spending on healthcare. And then also looking at high earnings per share stocks. So if Joe Biden reverses the corporation tax cuts that Donald Trump introduced, this can lead to a drop in the earnings on shares, and therefore these high earnings shares may be less favoured and thus decrease in price as people start to move their money into possibly more growth shares. Okay, so now let's head over into Quant Connect. I've just got a fresh algorithm that I have opened. Okay, first let's grab the data. And we're also going to be using the algorithm framework, so we won't need this method here. So first let's grab our odds data. So I've prepared beforehand a little function which just returns like a nice data frame which has the Biden odds, the Trump odds, and then the difference between them. And let's take this in our initialize method. So let's call this self.odds data equals self.load odds data. Okay, so this is just going to grab our data from this function here. Next, our start date. So the data starts on the 13th of March from this FT article. So we're going to set that as our start date. $100,000 in cash, that's fine. And what we're going to be doing is we're going to be using a universe selection to select our healthcare stocks and our high earnings per share stocks, so we don't need this here. Okay, so the way I like to do my algorithms when I'm using the algorithm framework is to just follow the steps of the algorithm framework. So let's open up the documentation. So here we've got algorithm framework. First, let's start off with the universe selection. Cool, so what we're going to do is we're going to be using a fundamental universe selection to select our stocks. So let's find it here, fundamental universe selection. Let's grab these two functions here and drop them into our algorithm. Okay. We also need to remember to actually set our universe selection as well in our initialize method. Cool, so that looks fine. Right, so first, what we're going to do in our course selection, so this is where we're given data on the price and volume. So we're first going to sort by price, so we'll call this filter price, and we'll do C for C, bit of list comprehension. So list comprehension is perfect for the universe selection that we do here. So C for C in course, if C dot price is greater than, let's say, 5. So this is just going to sort out the low priced stocks. Now what we want to do is sort it by dollar volume. So we want the most liquid stocks in our universe. So sorted dollar volume. And so here we're going to do sorted. We want to reverse this so it's in descending order. And we're going to go C4C in filter price. And then we're just going to put another check in there to check that it has fundamental data. So that's this, has fundamental data check there. Cool, so we don't want all of these stocks, we just want, let's say, the top 100. So here we're going to do C.symbol for C in sorted dollar volume. And we're going to take, as I said, the top 100. So that's our course selection done. Now let's move on to our fine selection. So here, this is where we're going to be setting up our healthcare stocks and our high earnings per share stocks. So we also want to create separate lists for high earnings per share stocks and healthcare stocks. So we're going to make this an attribute of our algorithm. So let's do self.healthcare equals, and so it's going to be F for F in fine if, and this is where we need to start classifying the stocks. So let's head back into the documentation, and now we want to go down to the data library and down to fundamentals. So this is where we can find all the different references for our fundamental data. So we want to look at healthcare stocks, so we're going to be looking at the sector. So let's just find sector, and here we can see here these are the sector codes, and so it's showing us to do .asset classification .morningstar sector code equals Morningstar sector code dot, and then, okay, so let's take this bit here, drop that in, so F dot that equals, and let's find our healthcare one. Okay, yeah, pretty simple, just Morningstar sector code dot healthcare, and let's put that in there. So this has given us all of the healthcare stocks in these top 100 most liquid stocks. Great, now let's do the same for high earnings per share stocks. Let's do sorted and reverse equals true, so we get it in descending. And now let's create our list again, so F for F in fine. And we don't want to have a crossover of the healthcare stocks and the high earnings per share stocks. So we're going to do F for F in fine if F not in self.healthcare. Okay, and then we set a key, which reminds me we haven't set a key up in this sorted dollar volume, so let's quickly do that as well. So key equals lambda C dot volume. Cool, that solves that problem there. And so yeah, let's set this key for this fine fundamental data. So now we need to find what the attribute is for the fine fundamental data object for earnings per share. So let's head back into the documentation, into these reference tables, and let's search up earnings per share. Okay, and let's take this one, normalized basic earnings per share. And we want the 1 month frequency here. Perfect. So let's head back into there. We've got F dot normalized basic EPS dot 1 month. So this will sort the remaining stocks that aren't healthcare stocks by their EPS, and let's take the top, and we're going to take the top number that is the length of the healthcare list. So we want the same number of healthcare stocks as we have high earnings per share stocks. So let's just do len self.healthcare. Great. Okay, so now we need to return f.symbol for f in both lists. So self.healthcare, let's head back here. make this a list of lists, list of expanded lists. So let's put expander on that. Okay, and let's just do the same for these high earnings per share stocks. Great, so what we've done here in this universe selection is filter by price to start off with, then sort it by dollar volume, take the top 100 most liquid stocks, and then create lists for healthcare stocks and our high earnings per share stocks. And these lists will be the same length. Okay, so let's look at what's next in our algorithm framework. So let's head to the top of here, algorithm framework, and now we're going to move on to our alpha creation. So what we're going to be doing here is emitting insights based on this betting odds data. So the plan for this alpha model is it's going to look at the percentage change in the difference between Biden's odds and Donald Trump's odds. And if this percentage change is over a certain threshold amount, then we're going to emit an insight to buy healthcare and sell high earnings per shares. And if it's below a certain amount, then we're going to do the opposite and sell healthcare stocks and buy high earnings per share stocks. Okay, so let's grab a basic alpha model class. Great. So we've got this basic alpha model class. We're going to call this Biden-Trump odds alpha. And we're also going to initialize it and drop in our algorithm. Cool. We don't need to do anything when the securities change, so we're just going to put pass there. And then let's make sure that we also add our alpha model up in our initialize method of the algorithm. Cool, so to do that here, let's just grab this. Let's just self.add alpha. Let's add our Biden-Trump odds alpha. And remember, we're going to drop in our algorithm object so we can access these algorithm attributes. Awesome. So now let's get into creating our insights. So let's just sort out the indenting on here. Okay, so we need to get the percentage change. Let's call this today. So this will be the difference between the odds in Biden versus Trump on the day that this alpha model is being run. So today equals self.algorithm.oddsdata.lock, and we're gonna grab the time. So remember, this is time series data, so all we're gonna do is just get the slice of the data frame at the current point in time, and we want the difference. Cool, and so we also need the previous one. So here we're going to put in a look back period. So we don't necessarily want the previous day, we can determine the amount of previous days. So let's make this, for example, 5 days look back. Okay, so same principle, algorithm.oddsdata.lock, algorithm.time minus, and here we go, time delta self.lookback. Okay, so this is going to just shift the time back 5 days previous. And again, we want the difference. Okay, and then percent change, very simple, just today minus previous divided by previous. Cool. Okay, so next thing that we're going to do is check if the percentage change is over or under our threshold amount. So let's go if percentage change, and let's take the absolute percentage change, just to save us time, is greater than, and let's also define a self.threshold amount. Okay, so we're going to set this threshold amount to 10%. So if there's been a 10% change over the past 5 days, 10% positive increase or 10% negative increase, then that's where we're going to emit our insights. Okay, so let's just also drop this insights at the top, creating that list. Cool. So if the percentage change is greater than this threshold amount, this is when we get into emitting the insights. So we're going to have two directions. We're going to have our healthcare direction. So this is whether the insight is emitting an up direction, so we think the price is going to rise, or a down direction, we think the price is going to decrease. So healthcare direction equals, so this is going to equal insight direction dot up if the percentage change is positive, so if it's greater than 0. Else we're going to emit a down insight. Okay, and then we're just going to do the opposite with our high EPS stocks. So insight direction dot down if the percentage change is positive, else insight direction dot up. And so no need to worry that this doesn't include the threshold, because we've already checked for the threshold here. Cool, now we just need to create our insights for the two sets of lists of securities. So we're going to say for security in self.algorithm.healthcare. So this is this healthcare list that we created over in the universe selection. This is what we're accessing, these fine fundamental objects. We're going to do insight.append, and we're going to create a price insight. So let's just quickly double check in the documentation. Let's go down to creating insights. And you can see here we've got this nice helper function. So let's just copy that and paste that in. Okay, so here we want to drop in our security symbol. So we can just take that attribute. This here, if we go back into the documentation, you can see is the time delta, so how long this insight is going to last. We'll set this to the look back period, so we'll do time delta and then do self.lookback. Okay, and then we've got the direction as the last one, and we've already created this healthcare direction, so let's do that. And there you go. So that's all the insights created for our healthcare stocks. Now we can just copy and paste this and do the same for our high earnings per share ones. Okay, high EPS, and just change this to high EPS direction. Cool, and we're going to return those insights. So if the percentage change is not above the threshold amount, then we're just going to return empty insights. Cool. So just before I forget, we need to pop in some imports for our data method that I created beforehand. So we want JSON, and we also want to import pandas as PD. Okay, so we've done our universe selection and we've done our alpha model. Now let's look at what's next. So algorithm framework, we've now got a portfolio construction. So we're not going to create a custom portfolio construction, we're just going to equally weight these insights. So what we're going to do, go down to equal weighting portfolio construction model, and we're just going to take this. So what this should hopefully do is it will create an equal weighting long of healthcare stocks and short high earnings per share stocks, all the other way around. So we're actually going to be market neutral on this strategy. So this was the reason that I decided to make the high earnings per share stocks the same length as the high healthcare stocks. Okay, so we've set our portfolio construction, and now let's move on to the next thing, which is execution. So we just want an immediate execution model. Let's grab the code for that. And there we go. Cool. And we don't need any risk management, so that should be the algorithm ready to go. So let's click backtest and see how it performs. But before we do that, let's just set an end date to the end of where we have our data to make sure that we don't run over and start looking for times in the data frame which don't yet exist. So we can do this dynamically by just using the data that we have here. So we can go self.oddsdata.index. So the index is the timestamps. And then we can take the maximum, so the latest date, and we'll take the year. And then we'll just do the same with the month and the day. Okay, so let's change this to month. And then this one to day. Cool, so we've just dynamically set the end date, so we don't have to look into the data. Cool, so let's now run a backtest and see how it performs. Great, so the algorithm has run. And we can see that we've actually got a positive return, so it looks like it's been pretty bang on with the direction of these two lists of stocks. We can see we have been emitting insights fairly regularly. There have been a couple of gaps where there's obviously been a slowdown in the change between Biden and Trump's their betting odds. And so I just wanted to quickly cover the reason why we decided to go with the percentage change and not what the current actual betting odds are. So if, for example, Biden was 75% chance by the betting odds of getting in, after a while these odds will be priced into the healthcare and high earnings per share stocks. So this change will have already happened and they'll be priced at the correct amount for Biden to have a 75% chance of winning. So we want to capture when it changes, so when that chance increases and therefore the stocks get priced to a different level. So that's why we've gone with the percentage change. So you can see that over this short period since March we've had quite a bit of volume there, 10 million in volume, and therefore we've racked up quite a lot of fees. So you could do a bit of tinkering with possibly introducing a turnover constraint or looking at when you rebalance the portfolio to reduce these fees. Also, you could have a different look at changing the look back setting and the threshold setting. What you need to be careful to do though is not to overfit, so not to find the exact float value of the threshold which will maximize your returns. So I think choosing a look back of 5 days and a threshold of 10%, I think that's reasonable ones to start off with. And you can see that it's produced reasonable returns as well. So I think where this trading strategy could get really interesting is a lot closer up to the presidential elections. There could be a bit more volatile movements in the different betting odds, and therefore the healthcare and high earnings per share stocks could be seeing some big movements as investors try to look forward to what a Biden or Trump presidency would look like. So with all of that in mind, I hope you now have a better idea of how to approach using external reference data to derive alpha and create a strategy using the algorithm framework. If you would like clarification on any of these points or have general questions about our platform, please do not hesitate to reach out. Both the team at Quant Connect as well as the whole Quant community, now over 100,000 strong, are valuable resources. I'll see you next week. Until then, happy coding.